Well, hey there, guys and gals. Welcome to Miyagi Mornings, episode 153. We're going to talk about Bitcoin today. This will be the only episode covering cryptocurrency this week. I know that a lot of you love when I talk about cryptocurrency, and a lot of you don't. Heard about that last week when I did 2 cryptocurrency episodes. I don't usually do that, but Miyagi Mornings is multiple things. It's part of the entire TSPC network. It is a commitment that I made a year ago, and I have kept to put these out every week. It is designed to be as non-political as possible. Sometimes what we talk about has political implications. We won't really be talking much about any political implications today, but when you look at something like Bitcoin, of course, the government can have an impact on it, so we can't ignore that impact. But I'm not on here to tell you who to vote for or which ass clown to support or anything like that. You guys know that. But it's also my way of having kind of this stream of consciousness. The thing that I most want to talk about on any given day, the thing that I feel like kind of in my gut and impetus to talk about, I try to do that as much as I can with this. And I think that kind of makes it authentic. And we'll give just a little more time before we start the actual subject today. But what today's subject comes from is how much I hear and read complete and total nonsense about Bitcoin, cryptocurrency in general, but especially about Bitcoin. Just things that, like, well, if you look at the thumbnail for today's video, it's a famous quote by Samuel Clemens, aka Mark Twain. It ain't what you don't know that gets you into trouble. It's what you're sure you know that just ain't so. The things you think you know can be really, really dangerous for people. And in this case, the danger isn't so much that, well, something bad will happen. It's an opportunity cost. It's an opportunity loss. I really believe that as high as Bitcoin has gone, that we're still sitting at a time in history where we probably have the greatest opportunity that's ever existed for the average person to front run the system itself. And I think after you hear the reasons or the 20 items today, if you're still new to this, if you're still trying to kind of get in on the uptake of this and why this is so important, it'll make a lot more sense. And we're about ready to do that. If you are on YouTube and you comment, I will see your comments in real time. If you are on Float or Odysee, I have to look over here to be able to see what you're saying, and I won't probably include you in the run of the podcast. However, when we get to the end and I kind of hang out a little bit, I'll make sure I go over here and check the comments that are over there. Comments for me are best put in all caps. It kind of makes me separate them from your chatting between each other. With that, let's roll. As StreamYard lies to me and says we have 12 people online because we have almost that just on Float. So something's wrong with the numbers coming in on StreamYard today. But it looks like there's actually a bunch of y'all out there. So let's roll with this thing. And I think this audience, many of you guys will be like, I knew that. Maybe there'll be a couple things you pick up today. But this will be a good one for sharing as well with the uninitiated, the future plebs of Bitcoin. Hi, guys. Welcome to Miyagi Mornings, episode 153. Today we are talking about Bitcoin. And we're going to be talking specifically about 20 things that most people don't know about Bitcoin. It could also be called 20 myths, so I don't know if all of them would fall into myths, because some of the things that people don't know, they also think they know the exact opposite, or they think they know something that's not true in that regard, and this is a correction to that belief. So here we go. We will go fast since there are 20 of them today. Number one. You often hear people say Bitcoin is backed by nothing. This is nonsense. Bitcoin is backed by security, technology, and energy. But the primary thing that actually backs Bitcoin is security. Technology is the means by which that security is provided, and energy is the fuel by which that security is provided. And what I mean by that is if I send Bill a Bitcoin, Bill knows that Bitcoin is in fact a Bitcoin. We can't double spend it. I can't cut and paste and make more Bitcoins. There is absolute security. And then once Bill has that Bitcoin, as long as he doesn't give up his private keys to anybody else, there's literally no way anybody can take that away from Bill. Bill can go anywhere in the world and have access to it. Bill can go anywhere in the world and send it to any other place in the world 24 hours a day, 7 days a week, 365 days a year. That's what backs Bitcoin, guys. It's not backed by ether or smoke or whatever. It's backed by security enabled by technology powered by energy, and it is a digital asset in that respect. And so when somebody tells you Bitcoin is backed by nothing, they literally know nothing about Bitcoin. You can't say that if you understand anything about how Bitcoin actually works. 2, Bitcoin is not bad for the environment. When you say Bitcoin's bad for the environment, you're saying electricity is bad for the environment, and you're making no differential between where any of the electricity comes from. The same people saying this have 5,000 square foot houses or larger, Mr. Musk, and are spending, thousands and thousands and thousands of dollars a month on electric bills, some of these people. I wonder what Elon Musk's electric bill is in spite of the fact that he's so involved with alternative energy. I bet you he's not 100% off grid in his giant mansions, right? Bitcoin is as good or bad for the environment as the electrical source that it happens to use. Bitcoin is actually able to help deploy new power generation operations, because most places where you generate power, I don't care if you do it with coal, oil, gas, solar, wind, geothermal, it doesn't matter what you make the power with. When you generate power, and then you have to take it from the point that you generate it and deliver it to the customers, you have an inherent loss of about 30% of the energy produced. And again, it doesn't matter where you do it. Though the further away you are from your customers, the more that number grows. And it doesn't matter how you produce that energy. By taking something like a Bitcoin mining operation, we can now deploy into areas where we would never have been able to afford to develop electrical generation, including alternative energy. That's just one example. You want to know what the biggest energy loss is of any currency in the world? It's the United States dollar, because it takes the United States military, which is the largest single user of energy in the world, to maintain the dollar. It's just nonsense. It's FUD. It's crap. It's not real. Bitcoin is as clean as the energy you use to turn the lights on in your home. And the more we develop alternative energy, the more miners will use it. And it's an incentive to develop alternative energy. 2 or 3, Bitcoin becomes more intrinsically valuable over time. Most people don't get this. They're the same people that say it's backed by nothing. As soon as you understand it's backed by security and technology powered by energy, you realize that the more people that participate, the greater the security that you have. And the better the technology becomes, the better the backing is. So Bitcoin is more valuable today than it was when it started, not just in dollars, as far as how it trades on the open market. Bitcoin is more valuable today because it's more secure today. It's more proven today. It's more robust today. It has more multi-layer solutions today. There have been people working on making Bitcoin better for the last 12 years. Some of them are people like MIT professors. So every year, in fact, every day, the overall value of Bitcoin, not the token or the coin, but Bitcoin, the network, which is actually where the value backing comes from, gets better. And since it gets better, it has more inherent value. Every time somebody says, I'm going to own Bitcoin, I'm going to hold Bitcoin, but I'm not going to use a light wallet, I'm going to run a node, and then downloads the software onto their computer and begins running a Bitcoin node, the network becomes more robust and more secure. Every time somebody starts mining, it becomes more robust and more secure. And that is where the inherent underlying value comes from: the technology, the security, and the energy powering the network. Next, 4 and 5 I'm going to do together. Bitcoin transactions are not expensive. And number 5, Bitcoin transactions are not slow. Let's look at a native Bitcoin transaction first before we even talk about something called the Lightning Network. Okay, on a native Bitcoin transaction, there is a fee. That's how miners get compensated. They don't just mine new Bitcoin. There's a fee for the transaction. That fee, compared to, let's say, somebody in Japan or somebody in, let's look at a country where this kind of happens all the time. Somebody in Venezuela that has a family here in America working and sending money back to them, it will cost that person about 50% to use Western Union, 40 to 50%. And it will take quite a while for the transaction to go through. That transaction can be done with Bitcoin. Even a native Bitcoin transaction for far less than that. I mean, that transaction fee is going to vary. But I mean, to put it in perspective, I withdrew a significant amount of Bitcoin off an exchange today. The transaction took 10 minutes and it cost me about $5. The transaction, I'm not going to say how much it was, but it was over $1,000. That's neither expensive nor slow, 10 minutes. Because let's look at the slow thing. So you go into Starbucks, you take your MasterCard and you swipe your MasterCard and then you leave with your scone and your overpriced coffee. And you think, well, that was an instantaneous transaction. The final settlement of that transaction between the banks on the back end will take 72 hours. Bitcoin will take around 10 minutes to 30 minutes at the longest when it's the slowest that the network runs. So when we compare this to actual financial networks, it's neither expensive nor slow. If we add in the Lightning Network, and you cannot discuss this at all, honestly, without talking about the Lightning Network. We can send a couple dollars worth of Bitcoin for about 1 penny, and it's instantaneous to the user. Yes, it's a side chain. Yes, it's my third party, but so is using a light wallet. So is using the internet. But the thing about the third parties inside the Lightning Network, they never know who you are. They don't know who you are, what you're buying, where you're coming from. There's actually more privacy in Lightning. So Lightning is fast, cheap, and it is more private. And anybody that has Bitcoin can use the Lightning Network simply by using a Lightning wallet. It's that simple. You can use other kind of like full-blown services like Strike, but you don't have to. So we can make it incredibly cheap and incredibly fast, or even if we leave it kind of native, if you want to put it that way, it's still faster and less expensive when you're talking about moving any significant amount of money anywhere in the world. In fact, you can move money to places you could never even move the money through conventional channels. Next up, Bitcoins are not held in accounts unless you're stupid, okay? I keep hearing people, well, my Bitcoin account, or saying, like they're going to make you give them the password to your Bitcoin account. If you're holding Bitcoin or Ethereum or any other cryptocurrency in a wallet, you do not have an account. There is no need to have an account record. An account means that your name's on it. An account means that it's linked to your social security number and your address and your driver's license and all that. You can go download a wallet right now. Somebody can send you Bitcoin, and it's about as anonymous as it really gets if you do it that way. Now, where they got the Bitcoin from, that may change the calculus on being able to track it up to that point. Sure, it's a public blockchain. It's not a privacy coin. I'm not saying that. What I'm saying is there's no such thing as an account unless you go to someplace like Coinbase to buy Bitcoin. When you do that, if you're smart, once you bought it, you don't leave it there in that account, right? It's in a wallet that they have custody of. That's a custodial wallet. Someone else maintains custody over your asset. This is dumb. You don't do this. You get a wallet and you transfer it off the exchange into your wallet where you have complete control over it that is based on what's known as a public and a private key. You have no need to attach yourself to that information whatsoever. There is no account. There's nothing to give anybody a password to. They can't make you do it. And you can go anywhere in the world. And as long as you retain those two pieces of information, public and private key, or something called the seed phrase, you can make your money appear at will anywhere in the world while there's nothing on you that says you have any money. That is not how anything that is called an account works. Try to do that with a bank account and move your money overseas and see what happens. Bitcoins do not have accounts. Exchanges have accounts. And that's really important because of the next one. Number 7, Bitcoin has never, ever been hacked. That's not a thing. It's bullshit. It's nonsense. Well, Mt. Gox got hacked. What did I just tell you? There's no such thing as a Bitcoin account. You can hold Bitcoin on an exchange account. You got it? Bitcoin didn't get hacked. Mt. Gox, the exchange, got hacked. This is one of many reasons we do not hold Bitcoin or any other cryptocurrency long-term on an exchange. We hold it in a wallet where we maintain our own keys, i.e. not your keys, not your coins. If you're holding on an exchange where you do not hold your own keys, you do not have Bitcoin. They have Bitcoin and they represent you and hold it for you. This is why you remove it. But if you hold Bitcoin in a wallet, unless you give away that highly confidential information, your Bitcoin is as secure it's more secure, I would say, than the gold in Fort Knox. Because at least they can drop a bomb on Fort Knox and maybe it'll go through. I don't know. I know this. If you have Bitcoin on your, a light wallet on your cell phone, and you throw your phone up there and blow it out of there with a shotgun, your Bitcoin still exists. As long as you have that seed phrase or that public and private key, you can control it from anywhere in the world. It has never been hacked, ever. Anybody that tells you Bitcoin has been hacked is either stupid, lying, or both. I'm sorry. Next up, Bitcoin is in no way a Ponzi scheme. This is the dumbest thing I've ever heard anybody say about Bitcoin. And one either has to either not have any understanding of how Bitcoin works or no understanding of what a Ponzi scheme is. The basic logic these morons pour out is that, well, if nobody buys Bitcoin anymore, it'll go to zero. So tell me an asset class in the world, a commodity, a security, I don't care what it is, that's not true about. If everybody decides they don't like gold anymore and they don't buy gold anymore, it will be worthless. That doesn't make gold a Ponzi scheme. I know what you're going to say, but gold's never been worthless. It has, before we decided to turn it into money. There was a time in history, not actually that long ago, as far as all of human history, that if you had a chunk of gold, somebody said big freaking whoop, or whatever language they used at the time, right? Gold has a multi-thousand-year history of being a currency. It's great. It's not going to go to zero. I agree. Neither is Bitcoin, because the intrinsic inherent value of the technology, along with the security, continues to grow. Okay? But even if it did go to zero, even if everybody did change their mind, that does not make something a Ponzi scheme. If that's true, then pork bellies are a Ponzi scheme. Natural gas is a Ponzi scheme. Oil's a Ponzi scheme. Every single commodity, every single security, every single ETF that trades anywhere is also a Ponzi scheme. Bitcoin trades on an open market that has its own price discovery mechanism of what buyers are willing to sell for, and buyers are willing to pay for, and sellers are willing to sell for. Like every other commodity out there. Anyone that says it's a Ponzi scheme needs to figure out what a Ponzi scheme actually is. Go look at how Bernie Madoff ran a Ponzi scheme. The way a Ponzi scheme works is you give me money and I say I invested it for you, but I don't. I spend it, right? And I issue a fake statement of account. And then I got to get another stupid ass to come in and put money into it. And that way, if you want to withdraw, I can give you some of his money. So I'm building a slush fund to cover withdrawals, but I'm not investing the money. That's a Ponzi scheme, guys. That's not an openly traded asset of any type. I'm sorry. Bitcoin is also not helpful to the government's desire for a central bank digital currency. You people that keep telling this nonsensical lie, I'm like, have you ever even considered what you're saying? Or in the words of Stewie Griffin, do you hear the words that come out of your mouth? Do you? Because what you're saying is, by having a completely independent, totally secure, completely decentralized option for digital currency, it makes it easier for the banking system to create a centralized digital currency and get rid of cash. This is dumb. Let's imagine a world where Bitcoin was never created. It's 2021, just like it is now. And the central bank decides that it's time to go digital with the dollar. What do? They shut down the mint. They stop producing cash and coinage. They ban its use over a period of, let's say, 5 years, and they start issuing all the money digitally, just like 97% of the money is issued now. Okay, done. Now, what are you going to do about it? You have a big box full of cash somewhere. What are you going to do? You're going to have to convert it into what? The new central bank digital currency. Bitcoin exists. Guess what? Deal's off. I have another option. And it's not just Bitcoin. It would be all crypto then. If I want privacy, I can go into R. If I want privacy, I can go into Monero. If I want kind of flexibility for smart contracts and DeFi, I can do something in the Ethereum network. If I just want the best, hardest money that exists right now, whether you believe it or not, I can buy Bitcoin. I can go buy that Bitcoin privately with that cash. I can deposit that cash before the time's up and do it above board. I have lots of options. Without Bitcoin, I have no options. Without crypto, I have no options. The crypto industry is the biggest threat to being able to standardize a central bank digital currency that could ever have existed. All you have to do is think. All you have to do is use the 3 pounds of gray matter in your head. You know, that stuff that's behind your freaking big old cranium? Just use that for 10 seconds and think about the implications of having a private, decentralized monetary system if the goal is a centralized government-controlled monetary system. You don't want the other option to exist, but it does. And we'll get to more on that in a bit. Buying and holding Bitcoin does not create any tax obligations. Until you sell it or spend it, there is no tax, no matter how high it goes. This is number 10 in our 20-item list. People think, well, if you go buy Bitcoin and you buy Bitcoin, let's say when it was $10,000 and now it's $40,000, you bought one Bitcoin, you owe tax on $30,000. No, it works like any asset that you buy and hold. That's what the IRS said. They didn't want to call it a currency. They created the situation that was most beneficial to them, but they also created a situation that, when you understand it, is very beneficial to us. You can buy and hold and grow the value of Bitcoin, and you don't pay taxes until you sell it. And when you sell it, you only pay tax on what you sell. So if I have $1 million worth of Bitcoin that started out as $10,000 years and years ago, and I go out and sell $50,000 worth, I only pay tax on the gain portion of the $50,000. Likewise, if I am a long-term hodler and I build up my Bitcoin portfolio over time using things like DeFi, I can then borrow against my own Bitcoin, pay it back with a future loan. And as long as we have reasonable appreciation of the Bitcoin value, I can do that for almost ever, never actually have my Bitcoin balance go down, and never pay a dime of taxes because there's no tax on debt. That's one strategy of many that actually maximizes this factor of Bitcoin. But people are worried they're going to pay taxes on something when they're talking about investing $500. Good Lord. Sorry. No, it's not a tax obligation until you exchange it. Next up, you do not have to be rich to invest in Bitcoin. I rolled myself into an alternative dimension the first time I was told this. Only rich people can afford to buy Bitcoin. What the ever-loving F are you talking about? And it was back during the last all-time high. It was like $60,000 of Bitcoin. I don't have $60,000. You can go buy $100 worth of Bitcoin. You can go buy $50 worth of Bitcoin. It fractions into something called Satoshis. A single Satoshi is a fraction of a penny. Anybody at any level can start investing in Bitcoin tomorrow. If you're in the United States and you have to do KYC to buy it with cash, as long as you have a bank account, a state-issued ID, and you don't live in a stupid state that says you're not allowed to do it or whatever, then you can start buying Bitcoin tomorrow in increments as small as $25 if you want to. It's a nonsensical argument. It doesn't even make any sense. I honestly don't even know where it comes from. I think you have to be exceptionally stupid to believe that. Next up, Bitcoin is a bad solution for illegal activities at any meaningful scale. One of Bitcoin's actual weaknesses, in my opinion, is that it is not a completely private cryptocurrency. It is a public ledger. And even if you don't know who's attached to the address, once Bitcoin goes to an address, you know which Bitcoins, because every single Satoshi is unique. Every single Bitcoin, every single fraction of a Bitcoin is unique. It has a unique identifier. And what happens is all the above board exchanges, when a cryptocurrency is used for something like ransomware or illegal activity, and it's identified as such, they basically put a black ball on it and say, you can't exchange it with us. And then all the law enforcement watches that account to see anywhere that shit moves. And it's bad news. If you want to do illicit activity, the number one currency used to do that with today, it's not a cryptocurrency. It's United States $100 Benjamin Franklin's. That's the number one currency used by organized and illegal activity crime in the world, is the American $100 bill. If you did want to use cryptocurrency, you'd use something like Monero because it's private. So this idea that Bitcoin is only used for child trafficking or something is absolutely stupid. And anybody with any brains at all that wanted to use a crypto for illicit activity would not choose Bitcoin. You have to be absolutely flaming stupid to do that. But that doesn't prevent your government from lying about it. And it doesn't prevent all the old sons of bitches in our Congress who don't know the square root of F all about Bitcoin from believing it. So there you go on that one. It's just not true. Next, 13, Bitcoin code has been audited by tens of thousands of independent programmers. Anybody can download all the code for Bitcoin and look at every single line of it. You know what that tells you? I don't know where you people get this bullshit, but it's not a CIA trap. You can't have code that is completely open to some of the smartest programmers on the planet who are able to pick it apart. And there are people, guys. There are coders and programmers that live to find anything that they can criticize in a code base. They live for it. That is their thing. That is what makes them famous. That's what gets their, their little special handle recognized as a super Uber hacker or whatever. You have had these people for 12 years able to analyze every freaking line of the code. If there was a phone home to the CIA line of code in there, it would have been found by now. And whatever this trap is you believe in would have been sprung long ago, because the government's not a fan of this stuff. It really isn't. 14, governments banning Bitcoin, though, is not doable. This is also stupid. Just think of what you've learned in this video, if you're new to Bitcoin already, about how Bitcoin works. How does it work? Numbers and math are used so that I can send information across the internet from me to you. You're going to ban that? Really? Are you really? Now, let's ignore the fact that right now we have countless billionaires who are currently lobbying the United States government who benefit from cryptocurrency, and the industry keeps getting bigger and bigger and bigger and bigger. Let's ignore the fact that right now, based on market capital value, Bitcoin is the 9th largest currency in the world, and that includes the US dollar, etc. Only 8 countries now have more value in their currency based on dollar market cap than Bitcoin does. Okay, let's ignore all that. How are you going to ban the sending of ones and zeros? How are you going to do that? Good freaking luck with it, right? Good freaking luck. Right now, we have all kinds of raw materials imported from all over the world to the United States to make drugs. And then those materials are processed, made into illegal drugs, and sold all over the country. And every cop and their brothers out looking to bust people for it. And you can't shut down the physical movement of illicit drugs through the country, but you're going to shut down ones and zeros. What this leads to is a place where the government starts looking at it. And these recent regulations, they do need clarification. I do hope they come. It will make things better if they do it. But when the government actually starts to see crypto is a source of tax revenue, it becomes valuable to government, and government starts acting protectionist with it. And these people in government don't know what they're doing. They don't understand it. That's why you have idiots like the simpleton Elizabeth Warren recently saying crypto could be good, but there could also be a run on crypto and it could need a government bailout. I'm not even going to explain why that's stupid. If you don't get why that's stupid, I don't know how you've hung into this video for this long. Next up, the majority of Bitcoin does not come from China. Almost none of it does now, since China banned Bitcoin again, specifically mining. But you know what happened? When China banned Bitcoin mining, all the miners packed up all their shit, mailed it to another country, hooked it back up, and built new freaking farms and started mining Bitcoin again. There you go. That's all that happened. If China did produce most of the Bitcoin, it wouldn't even matter. The country that actually has the most Bitcoin mining right now, United States of America, because in many markets we have really cheap energy, some of it highly renewable. If I was going to build a Bitcoin mining farm right now in the United States, I'd probably, as much as I hate the state's government, I'd probably go do it in Washington, because by making special deals, I can get hydroelectric power for about 4 cents a kilowatt if I properly locate my farm and I properly do the deal with the power generation company, because right now it's power they're losing. So it doesn't really matter where most of the Bitcoin comes from, because anybody anywhere can set up a computer and start mining Bitcoin tomorrow. It doesn't matter. It has nothing to do with how Bitcoin works. Bitcoin is governed by its code, not the location of its miners. I'm sorry, guys. That's just the way it works. Next, even if Bitcoin, because some people tell me Bitcoin, if it gets too expensive, there's no way it can be usable anymore. If Bitcoin went to $10 million of Bitcoin, here's a couple things that are going to happen. Number one, I'm going to post a video of myself dancing naked on my roof. That's one thing that's going to happen. But the other thing that's going to happen is you're still going to be able to make transactions as low as the value of a single US dime. You have to go to $10 million for a Satoshi to be worth a dime. You have to go to $1 million for a Satoshi, a single unit that makes up Bitcoin, to be worth a penny. Almost like that was the plan all along or something. That's the reason for the 21 million, because when we divide it with 9 decimals, we get to a penny per Satoshi at $1 million. Almost like that's a plan or something. I'm not saying Bitcoin's going to go to 1 million or 10 million. I actually think at some point in kind of the near future, we're talking 5 years, 10 years, Bitcoin will cross the $1 million threshold. But at that price, there's nothing about it that makes it impossible for you to buy your scone and your coffee. though most people are not going to buy a scone and a coffee with Bitcoin. We'll get to that in a minute. Next up, Bitcoin can be borrowed against for extremely low interest rates for tax-free retirement income. I kind of covered that already, so I'll go real quick through it for you. But you don't have to sell your Bitcoin to generate a retirement cash flow income with it. If you invest wisely, stack sats, etc., retire with $4 or $5 million worth of Bitcoin, you can give yourself a cash flow of about $150,000 in your first year of retirement. If Bitcoin does 10% as good as it's done up till now, you can do that infinitely until you die. You can have 30 years of retirement that way. You'll die and you'll owe about 65% of the value against your Bitcoin. Your heirs can continue that until it runs out, or they can cash out, pay it, and take the balance and do whatever they want with it. And that's who's saying? There's some idiot on there saying a billion coins bullshit. There's no billion coins, dude. No one said there was a billion coins. I don't know what you're talking about. Anyway, that's the truth, and that is actually going to lead to greater stability in the price of Bitcoin. The less people are willing to sell, the more upward pressure we have, and the more educated people become about the long-term future and the tax implications of exit, the less likely are to sell, and the more they are likely to use creative solutions that lock that Bitcoin and do not allow it to trade freely. This is good for stability. And it's the counter response to government saying it's an asset, not a currency. If it was a currency, more people would spend it. We'll get that in point 20. New technology for Bitcoin is being developed daily. This is also important. It ties back into where the backing comes from and why it's more intrinsically valuable. Lightning is a network that's been built, I talked about that already, for about 3 years now. We've got people all over the world making that second layer of technology better. We're now developing what's called layer 3 technology for Bitcoin, so that Bitcoin can do all the fancy shit like decentralized finance and stuff that everybody talks about Ethereum doing, and do it as the hardest money there is. There will always be an upgrade to the technology. You don't have to upgrade the underlying Bitcoin network to upgrade the technology. And this is where people get really stuck, because since they think of Bitcoin as technology rather than a network that is powered by people in many ways, okay? What they think is, well, since it's the first one, it can't be the best one, and somebody's going to make a better one and it's going to supplant it. The reality is, if you look at, for instance, just market cap, the closest thing to Bitcoin in market cap is Ethereum, and it's not even a third of the market cap of Bitcoin. That market cap is representative of holders, but it's also representative, again, miners who verify and secure transactions. And every time we increase the value of the supporting technology that works around Bitcoin, this is where we get to the concept that Bitcoin is digital gold. Digital gold does not mean it replaces gold. Digital gold means in a financial system, it can act the way that a hard asset like gold can, in that all of these things can exist backed by it, right? That might be a little high level for today, and we do need to wrap up. But just understand, new technology that makes Bitcoin more usable and able to do more things is being developed every day by people from coders in garages, again, to MIT professors. Next, the amount of new Bitcoin is cut in half roughly every 4 years. This is what we call the halving. This is what creates absolute scarcity over time. So over time, the absolute scarcity will limit us to 21 billion Bitcoins. Most people, especially those listening to the live stream, know this. You're aware of this. What I don't think most people do, though, is the math and say, well, what does that mean? Given that we have like another 20 years of Bitcoin being, mined before it runs out and it goes to only transaction fees. What does that mean for how much Bitcoin is being produced every day, every year, every 5 years, etc.? Again, more than 18 million have already been produced. At this point in 2021, the approximate number of new Bitcoins that will be mined starting January 1 and ending December 31st is 328,500 Bitcoins. That's not very many. Think about that. We have well over 1 million users a month setting up their first Bitcoin wallet and buying their first Bitcoin. The plebs, and it's not a bad word or anything, it's not derogatory, it's just somebody new to Bitcoin. The plebs are taking power from the whales. The whales are exiting positions, making profits, reinvesting, and the plebs are buying anything that they can get. Again, we're growing by 1 million new Bitcoiners a month, and we're producing 380,000 and change Bitcoin a year. By the way, in 2024, that number will go in half again to around 180,000. And 4 years later, it will go in half again to 90,000. Do you get that? I mean, it's really important that you understand that if you're going to understand what I'm talking about when I say it's an absolute hard cap. And that the new supply continues to decline by design. It's hard-coded into the system. You can't change it. It would require more than 51% of people that use, mine, and work with Bitcoin. You're talking millions of people to all agree we want to change it. When everybody's agreed for 12 years, these rules work. It's not happening. Next, and the last one, the real reason Bitcoin isn't spent. Everybody says, well, nobody wants to spend it because it goes up in value, right? That's bullshit. That's not why. Since people hold so little of their net worth in Bitcoin relative to their total net worth, and they're a lot of people do come in brand new and they're betting on it, going to the moon, buying Lamborghinis, whatever. I understand that. There is some truth to it. It does create savers because that's what deflationary currencies create. But the reason that people don't spend it are two things. One, we've already covered heavily today. Tax implications. When I spend that Bitcoin, I realize a gain. I pay a tax. I don't want to do that. I don't want to give the government some of my wealth. But the bigger reason is we don't earn Bitcoin. We don't get paid in Bitcoin. If I immediately started paying you a salary, let's say you make 60 grand a year, $5 grand a month, and you came to work for me and I said, I'm going to pay you $5 grand a month in Bitcoin. You're going to spend Bitcoin for all the shit you spend cash on right now on a monthly roll. And then whatever is left will go into your midterm or long-term savings. And if you're smart, honest to God, you would convert your midterm savings into US dollars. That's your stuff that if the transmission goes out in the car, you might have to spend that money next week, or you might not spend it till next month, or you might not spend it till next year, but it's that emergency money. That's the middle bucket. The long-term bucket, yes, there's a huge incentive to hold on to Bitcoin because its past performance looks really good for future results, like any security or asset class that's had a great run for over a decade. But the big reason is because people aren't paid in it. Again, if you start paying people in Bitcoin, they'll start transacting in Bitcoin because there's a certain amount of things that they have to buy every year. People don't actually want to spend their dollars either, but you need stuff. And the reason you spend dollars instead of Bitcoin or Ethereum or anything else is because what you're paid in, and it's what the government collects taxes in. Anyway, 20 things most people don't know about Bitcoin. Now you probably know a lot more than the average person. Real quick before I wrap up on the podcast, Tyler Durden, which is I'm sure a pseudonym, says having as little to do with the price at this point, though. I agree. We'll talk about that in the after show. With that, I'm going to wrap up the podcast. I'll be back tomorrow. We're going to be talking about reloading on Miyagi Mornings tomorrow. All right, guys. So, yeah, Tyler is right. I don't know who this Ed Pomey is, but a billion coins bullshit. I don't know what that comment is, but that's a retarded comment. I never said there was a billion coins. Now, if you're saying that when I said that there are some tokens out there that have issued a billion coins, and you're saying that's bullshit, maybe that's what you're talking about. You're wrong. You're absolutely wrong. There are tokens who have issued more than a billion tokens. What's the one that this like a layer 3 or a layer 2 for Ethereum? It's like for basically build a lightning network for Ethereum. Polygon, I think, issued 10 billion tokens, dude. So there, go look it up. Get your ass on CoinMarketCap, CoinGecko, something like that, and start looking at where the market cap relative to the currency quantity comes from in some of these projects. Some of these projects have figured out, we can get into the leaderboard just by issuing billions of tokens or hundreds of millions of tokens, depending. True Anarchy says, who owns Pirate Chain? Nobody. Nobody owns any crypto, really, because in the end, especially if it's a mined currency, the miners actually are in charge, right? So I don't think anybody really owns any crypto that's actually a mined proof of work crypto. Now, some of the proof of stake tokens, you could make a good case that somebody does really own them. But when you look at these things, they're more accurately described as projects than companies. And most of them, anybody can work on, right? Anybody that wants to contribute to the project can work on the project. If you want to kind of be recognized inside the pirate ecosystem for R, you can just start doing shit and they'll recognize you. And next thing you know, you might even be, promoted to a rank of first mate or captain. That's kind of how they do things, kind of pluck you over there or what have you. Tyler says Jack and Nicole own Pirate. Well, I do own, maybe that's what he was asking too. Maybe he didn't mean who owns Pirate Chain as in who owns the project, but who individually owns Pirate Chain. You're damn right I do. And if you listen to me, you bought it too when it was like 8 to 10 to 12 to 15 cents. And I was saying, this is one you need to buy. I usually don't do that. I'm not a financial advisor or anything, but when I looked at what it was and how it worked, and I looked at a price down that low when I had Drath on the show, I was like, man, like you gotta be crazy not to invest in something that cheap, because look at what $100 or $200 that people piss away every week anyway on meals out and whatever could have done for you on that one. Is there a DEX for R? Yes, Polarity Exchange has R on their trading pair with Tether. In fact, everything on Polarity Exchange is exchanged through Tether. They do that because it actually helps people know exactly what they're paying for what they're getting. So that's their primary pair. So if you put Bitcoin into Polarity and you want to buy R, you'll exchange it to Tether, and then you'll know what you're selling it for, and then you'll buy your R with Tether. I think they charge 1 R to withdraw. So I think that's, you could look at that as a high fee or a low fee, depending on how much we're talking about. If you're buying 10 R, that's 10% fee. If you're buying 100 R, it's a 1% fee for withdrawal. I'll also say one more thing about the DEX, and DEX is decentralized exchange for those that don't know. Polarity, their wallet is incredibly secure. You do hold your own keys, and I would hold money there at least midterm, probably not long term. But like if you were trading R and you didn't want to incur fees going back and forth, I'd be pretty comfortable leaving, thousands of dollars sitting there, honestly, because of how the wallet works. Tyler also says, would love you and John Bush to do an episode on making sense of the last week of alt skyrocketing, NFTs, etc. Yeah, I don't know, man. I don't dig into all these alt projects very heavily. I think a lot of it is just Bitcoin goes up. Lots of people start paying attention. There's a lot of new people to crypto that think, I can't get wealthy investing in Bitcoin, so I need to find the next thing. They go out and they read about a project, they pour some money into it, and then they start talking about it. And it's just, as much as I'm an advocate, guys, please understand that I think the vast majority of crypto projects are complete scams. And when I say that, maybe I'm using the wrong word, because I think a lot of times the people building them are not doing it to deceive, right? So like if I say scam, I think that actually means that the person intends to scam you, right? I think it's more like they believe they can do something better and they really can't. Trent says, do I still use the Jax wallet? I do, because I've had it for so long and I have some money in it. I am doing almost all my new transactions using the Exodus wallet. I like it better. I think it has a better interface. It does more assets. If I was starting today, I would start with Exodus over Jax. And when I move into that third bucket, guys, right, I'm not going to be trading it. I'm holding it long term. I use a Ledger hardware wallet, and I think you should too. I only got a time for a few more here. Exodus is pretty easy to use for multi-coin wallet from Dodo Bird. On float, I agree. Any wallet recommendations to avoid? Not really. I mean, if you want to throw it in Google and see if there's any kind of like problems with it, you can do that. But most of the wallets out there today, I mean, understand that most wallet code is also open source code. And so as soon as it hits GitHub or whatever, all those thousands of programmers that like to find loopholes and shit and point it out and get known for it, they start raking through it. Rob says, agreed, after using a number of multi-coin wallets, I'm making move to use Exodus as my primary wallet after fooling around with it this weekend. It's a personal preference in my opinion. Yeah, it is a personal preference. I'll say one that's really cool about Exodus is that if you're using Bitcoin or any crypto at a level where you're paying expenses, paying contractors, paying employees in crypto, and you're doing everything above board and you're reporting to the IRS and what have you, The interface for Exodus is beautiful because you can put a note with every single transaction of what it's for and where it went, and it makes accounting just beautiful. That doesn't apply to 99% of people listening to this, but if you start to actually build a business on crypto with crypto, and you don't pay the tribute to the Ira Ramon Sansi, a gangster, that's the IRS, you're risking everything you have. And I don't think you should do that. I think that just because you're earning crypto doesn't mean you don't have to pay taxes. I don't think you should have to pay taxes. I accept that you do. Let me see if there's anything else before we what value should we consider moving into a hardware wallet coming from Podboy? So how much do you have before you move it to a hardware wallet? To me, I'm confident enough in light wallets, multi-currency wallets like Exodus, et cetera, that I'm okay holding up about $5,000 in there. I think that's subjective and personal, though. Well, how much crypto you have? If that's every dollar in crypto you have, you probably need to get that shit into, a ledger or something, right? Look at it this way. Your exchange account is like your bank checking account, okay? Your light wallet is like your bank's savings account. Now, it doesn't have the public accessibility that a bank savings account does. It's much more secure from the government, et cetera. But look at it that way. That's your savings in your bank. And your hardware wallet is like your long-term savings that you have in retirement and stuff like that. So your number relative to your total is probably equivalent to about how much you'd let your savings build up in your bank account before you'd say, I should really move this even if I'm not going to buy a stock with it or something. Like there's enough in the savings account to cover the needs of the savings account that now I'm going to move this into like a different bank and laddered CDs or something like that, right? Like when you get to that number, what's above that number needs to go in that hardware wallet. And what that does is it spreads your risk out. So maybe you have a little bit on exchange for quick, efficient trading. If you are in the trading world, you have some in a light wallet. And that's when somebody says, hey, you want to buy this? And you say, yeah. And they say, I take crypto, and you want to pay them in it? That's what that's for. So that's kind of how you set your number there. However, I think there's a bottom too where it doesn't make sense. I think if you have $300 worth of crypto, don't go buy a $100 hardware wallet to store it. I don't think that financially makes sense. I hope that one makes sense. And I got to get going because we have a really great interview I need to get ready for. And I have less than 30 minutes now. I'm interviewing Dave Jones. Who the hell's Dave Jones? Dave is awesome. Been a system administrator for 24 years. He's been working on building RSS aggregation software for about 15 years. Some of you would know the name Adam Curry. He works directly with Adam Curry. He was instrumental in building podcastindex.org and Podcast Wallet, which is a new way of distributing your podcast that Adam Curry and his team have come up with that allows podcasters a little less fear that one day you might get deplatformed by something like iTunes or Spotify or something like that. Additionally, it allows your listeners to stream you Satoshis. Yes, you can get paid in Bitcoin as a podcaster if you're on Podcast Index and you set up your podcaster wallet. And yes, I said Bitcoin, which you can't stream Satoshi. It's too expensive. Their fees are too high. No, because it uses the Lightning Network. So you can deposit some money into a Lightning wallet and then say, I want to, every time I'm listening to a podcast, I want to stream Satoshis to these different podcasters to support them. And maybe it's cheap. Maybe it's something like you say, you know what? All the podcasts I listen to are worth like $10 a month. So you set it up so that about $10 a month will stream out. And whoever you happen to listen to, then that's how they get paid. I'm not exactly sure how to set it up. That's part of why I have Dave coming on today. But I think this is really amazing. And we're going to be talking about a lot of stuff. In addition to that, we're going to talk about how podcast app developers got the shaft in the podcast economy over the last decade and a half, and how the work that they're doing is designed so that, people can go out and develop technologies and actually reap a reward for doing so in an incredibly huge growth industry that is podcasting. And I believe one of the last places for free speech that's left. Anyway, guys, hope you enjoyed to that. I hope you enjoyed today's subject, and I hope it answered more questions than it created for you. If you want me to do maybe a follow-up on this next week, send me your questions or things you want clarification on. TSPC in the subject line, send it to jack@thesurvivalpodcast.com.